are going live over on YouTube. So go to YouTube, type in Alpha Day Trading. You guys will see that we're live and we're all set, ready to rock and roll. Yo, what's up? Good morning, everybody. Yo, what's good? Everybody's over on the tube. Absolutely love it. So we got about 3 minutes. We'll dive into it. Let me go ahead and get a stream going inside of chats. And yeah, guys, we'll dive into it. And get a stream loaded. Bop, bop, bop. All right, cool. Woo! Yeah, so good question, right? Like, what's going on with MULN? So they just announced a $25 million stock buyback program with MULN. So yeah, you have MULN right now currently up from a close yesterday of 17 cents. Right now it's trading at 25 cents over on MULN. I make sure we're all set. Got a few viewers over on YouTube. Awesome. A few individuals left over here on TikTok. Again, if you want to see my screen, see the examples, and get this training that we're going to host this morning right now over on YouTube, just go to YouTube, type in Alpha Day Trading. We're officially live. We're going to spend about 15 to 20 minutes, dive into a morning market training. Again, really talk about some things that could really help you out in your trading. And then from there, dive into a Q&A session. And then maybe, just maybe, we stick around for some live trading today. There's a lot of great opportunity in the market, guys. Right? So everybody over on TikTok, come over to YouTube. Alpha Day Trading, we're officially live. Let's dive into it. And let's officially make it happen. Good morning. Good morning, ladies and gentlemen. Everybody inside of chats, wake up. We are back, ready to attack. Again, good morning. Happy Money Thursday, everybody. And then over on YouTube this morning as well, good morning. Happy Money Thursday. Always excited to be back. Excited to see what the market has in store for us. And excited to work with each and every one of you. So, Joey, what's up, brother? Good morning. Mr. Joey, he's inside of chat. He is ready to rock and roll. You got Steve inside chat, Dave, Matthew, William. Woo! Everybody's here early this morning, ready to rock and roll. Love it. Josie, good morning. All right, so it's 8:15. You guys know the drill. We're going to dive into our morning market training for the next 20 minutes, then dive into a nice open floor Q&A to answer any questions that you guys have. 8:45, we dive into the pre-market rundown, followed by the morning game plan session. And then 9:30, we start live trading, having some fun together. Quality alerts, making sure you guys are learning and earning and getting those profits posted up inside of Profits Chat. All right, so we're going to dive into it, guys. And today, this morning, what I want to talk about is this topic right here, right? Something that a lot of traders struggle with, you know, and it's really just letting the market come to you. That's what I want to talk about today, right? Let's the market come to you versus you chasing the market, right? You hunting for opportunity. You're out here just doing TA, just technical analysis overload, right? You're staring at charts at 3 o'clock in the morning looking for stocks. You're here at 1 o'clock in the afternoon. The market's slow. The market's dead. You're still hunting for opportunity. You feel like you have to be in a trade to make money, right? A lot of traders struggle with that, with not letting the market come to them, right? They're going to the market. They're hunting for those opportunities, right? They're out here searching. They're in hunt mode. And that right there is one of the biggest reasons why, so many traders fail, right? So the one thing that, again, I just really want to hit on this morning and really stress and talk about is letting the market come to you. And again, show you a couple examples from some trades that we had yesterday where we just identified an opportunity, right? We built our trade plan. Then we sat back on our hands and said, you know what? We can't touch the stock until the market comes to us, until the market comes down to our level or up to our level for the long, for the short, whatever the case is, and then waiting for confirmation at the same time just to make sure it's a great trade. It's a trade worth getting involved with, right? It's a trade worth the risk. So again, everybody should write this down and everybody should have this rule and everybody should put this front and center in their mind every single day. Let the markets come to me, right? That's all you have to do is just let the market come to you. All you can really do as a trader is come in, scan the market, find opportunity, right? Based on technical setups, fundamental data, whatever the case is. Like you will come in and there's 19,000 stocks. Instead of you hunting and searching through these 19,000 stocks, right? Have some criteria established to help you eliminate the noise, right? What is some of like the criteria that I have to, eliminate a lot of the noise, right? To really eliminate the 18,995 stocks out there and really focus on the 3 to 5 with the best potential, right? Stocks that are moving in pre-market, stocks that have high relative volume, right? Stocks that are lower float, stocks that are hitting the gap list, that have press releases, that have catalysts, right? That have daily technical setups, right? Again, I look at maybe 100 to 200 stocks every single morning. I scan the market, but that does not mean I'm hunting for opportunity within these 200 stocks. Okay, that would drive anybody just crazy, right? Looking at 200 stocks, looking for opportunity, hunting, right? Justifying levels, justifying setups, taking that trade just because it's moving, taking this stock because it ticked up 5 cents, right? You're just all over the place. Your head's on the swivel. We want to stay focused, right? Our goal is to identify 3 to 5, opportunities for every single day. And how do we do that, right? We have a criteria checklist that we go through and we have to check off all those boxes. If we can check off all of those boxes, right, that stock's going to be what we call watch list worthy. And then from there, we can go in and mark up our levels, right? We'll go in and look at our higher time frame levels of resistance, levels of support, the overall trend, right? Go through and do your TA, do your due diligence, mark up your levels, get prepared for you, right? And then at that point, all you can do is sit back and wait, right? And so there's a couple examples from yesterday that I want to talk about, right? Again, let the market come to you. So what do? Again, we come in, let's say we're looking at the SPY, and we always start top down, right? So we go from the daily time frame, look at the bigger picture, right? Higher time frame levels of support resistance, right? Gap fills, where are we at with the 20 EMA, right? What's the overall trend? Do we have any economic data, right? We're just going through that process of getting prepared, marking up our levels of support and resistance. And so one thing that I want to talk about yesterday is the SPY. And again, getting prepared and simply sitting back and waiting for the market to come to us. And what was the game plan yesterday, right? Well, we had a couple game plans in place, right? Game plan number one was, hey, the SPY may start cracking on down and filling this lower gap, but we cannot touch the SPY until it actually confirms a daily gap fill entry. And so that never confirmed. So instead of getting in here, hoping the market turned over, instead of getting in here, hoping the market turned over, right, and just chasing the move, anticipating a move when it hasn't even confirmed, right, you're not letting the market come to you. You're taking puts here, taking puts here, taking puts here. For example, because you think or you feel that the market should come down and fill the gap. Guess what? You're not letting the market come to you. You're chasing that market. You're getting in too early. You're anticipating that this could end up filling the gap well before the trade has even presented itself, before that trade and the market has come to you and given you a confirmation to get involved, right? And that's how so many traders lose, is they'll be like, hey, this gap's got to get filled. I'm so biased that the gap gets filled. I'm so convicted. And that's fine. Conviction is good. But when you start making bad decisions based on that conviction, that's when a lot of traders get burned. Is a trader will come in and be like, oh, this gap's going to get filled, right? We're gapping down this morning, right? We can definitely fill this gap. When we open, I'm going to grab puts. And they're just getting in, and they're just getting burned, losing all their money and blowing up accounts because they're not letting the market come to them, right? And so how did we let the market come to us yesterday, right? And again, this is going to really help you guys out with being very, very patient, right? Patience is everything. Patience with a capital P-A-Y. Right? It pays to be patient. Sit back on your hands. Do your due diligence. That's all you can do. So we had a couple plans built yesterday. One was the short side to fill that daily gap, or the other one was actually to close the gap from Monday, right? Because we actually gapped down Monday into yesterday, was to actually wait for that gap to close, give us confirmation for a possible short, and then go from there. And so what did we do? All right, well, we had a couple plans in place, but the one plan was let the market push on up and close the gap from Monday, because we actually gapped down Monday into Wednesday. And so we opened, okay? Is there a trade here? No, right? Is there a trade here? No. Is there a trade here? No, right? At this point in time, we want the market to come to us, right? We want the market to come up and close that gap and then give us confirmation for an entry. Or we want the market to come down and enter this gap zone, again, confirmation for an entry. So right now, again, yesterday, based on this example, we're letting the market come to us, whether that's for a daily gap fill trade or whether that's for a gap fill trade to the short side off of, again, the gap down from Monday into Wednesday, right? And again, at this point in time, a lot of traders are sitting here like, okay, well, let me get calls, let me get puts, right? Instead of just sitting back and saying, you know what? I've identified my levels. I've identified what I think can happen in the market today, right? We could either fill the gap to the downside or close that gap to the upside and then start to drop on off, possibly. So I've marked up my levels. Now I have to wait for the market to come to me. And until the market comes to me, until the market comes to one of my levels, I'm hands off. I can't do anything. But so many traders have the urge to trade. They're anxious. They have to get in. They have to buy. They have to short. They have to be in a position or they feel like they're not a professional trader. Well, that's completely wrong, right? You actually want to spend the least amount of time in the market as possible. That's what I've learned the hard way over the years. Spend the least amount of time in the market as possible, right? Sit back, wait for the market to come to you, wait for confirmation, take your trade, get out, make your money, you're done. Right? Versus, okay, I think it's going to go up. Oh, I think it's going to go down. Oh, well, we just got a 50-cent pop on the SPY. It's definitely a long, and they're just chasing moves. They're chasing every little tick, every little move, every little pop, every little drop. They're in, just over trading, chasing the market, and that's not sustainable. And that's one of the reasons why 90% of traders fail, right? You have to learn to be patient. So again, wait for the market to come to you, right? Really work on that inner game. Be patient. Be willing to sit back on your hands, right? Be willing to spend the least amount of time in the market as possible, right? And what I've learned over the years is when I spend the least amount of time in the market, I make the most amount of money. When I have a lot of trades and I spend a lot of time in the market trading, right? I break even. I lose money, right? It's stressful. It's not fun. There's a lot of ups and a lot of downs. I end up spending 4 hours in the market. Or I come in, do my due diligence, mark up my levels, get prepared, and then just sit back on my hands. Really enforce that discipline. Be impatient. Wait for the market to come to me. And when the market does come to me and it gives me a confirmation, guess what? I'm already ready to rock and roll. I'm ready to execute. I already know how many contracts I want. I know exactly where my stop is, where my target is, and all I have to do is react at that point in time. And it's not stressful. I just react, buy. Okay, I got stopped out. I'm out. On to the next trade. Or, hey, buy. I'm in. Boom. Guess what? I just made money. I'm out 5-10 minutes later. Very low stress. And again, just really reinforcing the patience, the discipline, right? That mindset. It's a mindset shift. These things that will really, really help you excel in the market. So again, another example on the SPY. We marked up our levels. We had 2 plans in place. We're sitting back on our hands, being patient, being disciplined, waiting for the market to come to us. And I mean, how long did it take yesterday? Over an hour for the market to actually come to us, right? It was slow and steady. Just overall, there's a lot of potential trades through this range, right? You could have bought the pullback for the long. You could have gotten the pullback for the long. You could have gotten the pullback for the long, right? And if that's your trade and that's you doing your due diligence and waiting for the market to come to you, then that's fine. But a great example from yesterday was this trade on the SPY. We're just patiently waiting for the SPY to get up and actually close that gap from Monday's close into Wednesday's open. We left this big gap from Monday into Wednesday. And you're talking 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, right? You're talking like an hour and a half to 2 hours waiting for the market to do something, waiting for the market to come to us. And guess what happened? The market eventually came to us, did it not? This was actually a really killer trade yesterday that we called out, right? We were looking for entries. We called it out. We had a nice 2-to-1. VWAP was actually our target on this trade. It was a really, really good trade overall. And again, the SPY opened 2 hours later. The market comes to us. It closes that gap to the penny, right? You start to see good price action, upper shadow, upper shadow, upper shadow, upper shadow, upper shadow, upper shadow, right? You're starting to see it curl as well. So again, in the moment, you're looking at price action. You see it try the push on up and it backs down. There's selling pressure, right? Tries the push on up, it backs down. Pushes on up, it backs down, right? You see every time it makes an attempt to get the next leg up, to make a higher high, to break that level of resistance, it gets slammed right back down. Right back down, right back down, right back down. And that's a great indication of, hey, there's more sellers than buyers in the market. And you could visually see it curling on over, right? You actually see it rolling on over. You have that rainbow. You have that arch, right? You're starting to put in a lower high formation after you close the gap to the penny. And now you're saying, hey, not only did we close that gap to the penny, not only do we have price action that confirms a reversal, now we have a lower high crack of a trend line, and that's a strategy. So here, what strategy do we have? I don't know. There's just a 5-minute green candle. Okay, you can take a 5-minute opening range breakout. I don't freaking know what your strategy is. But again, we came in, did our due diligence, got prepared, marked up our levels, and we're hands off, hands off, hands off, hands off, hands off, hands off. No great strategy. The whole time, it's like the market could go higher. It could roll on over. And the whole time, it's like the market is just very unpredictable right now, right? We know we have a great level of resistance up here, and we know that we have a gap filled down at the bottom. Until then, there's really no crystal clear A-plus opportunity. And so we're waiting, being patient, waiting, being patient, waiting. Here we go. Fantastic. The market just came up and closed the gap. Just came up to the penny, closed the gap. And now we can start to see some pretty good price action that confirms, hey, there's more sellers than buyers. We closed the gap. Now we're seeing a lower high, potential crack of the trend line. You see how the market just came to us? All we were looking for was the market to come up and close the gap, right? And as it closed the gap and as it continued to develop and as it continued to move, it ended up setting up, giving us a killer trade, right? We got the gap fill. We saw a lower high. Now we have a trend line that we can crack. Guess what? This is a trade, guys. And this is that trade that we actually called on out. Right off this lower high, prior to the crack of that trend line, was the short entry there on the SPY. Stops over that high a day. So again, on this trade, you had maybe 20 to 25 cents of risk at most. And then you had a VWAP target, which was about 50 cents to the downside. And this was a trade that we were actually trading on a 1-minute time frame, right? But overall, just want to give you that example, right, of one of the trades that we took yesterday where it's like, guys, we can't really do a whole lot until the market comes to us, whether it comes on up and closes the gap, and then maybe it sets up, maybe it gives us a reason to get in, maybe it doesn't, who knows? This may have never set up in the first place. We may have never had a reason, right, to take this trade, but we waited for the market to come to us, and it did. It closed the gap. Great. Now is it setting up? Is there a reason to get involved? Well, hey, yeah, there was. Lower high, crack at that trend line. After closing that gap, seeing a lot of selling pressure as well. And again, if you're just very, very patient and you're really disciplined to sit on your hands and wait for the market to come to you, and then there's an opportunity, then there's a setup, a strategy, something to take advantage of, what you're going to notice is, one thing, your win ratio is going to shoot up, in my opinion. Your win rate is going to be much higher because you're not going to be taking puts here, puts here, puts here, puts here, right? You're not just going to be chasing every little move, jumping into every little 10 cent, 15 cent pop, right? What you're going to notice is you're taking less trades, and the trades that you're taking are of higher quality, right? And so that in turn is going to increase your win ratio. And then at the same time, you could really start to improve what your average risk reward is. But the biggest thing here is you're not taking as many subpar trades. You're taking more quality trades. And overall, that right there is going to boost your profitability. That's going to boost your win ratio. Again, keeping you out of the market, only coming into the market when there's a killer opportunity, when there's a killer setup, and then taking advantage of those opportunities then and there. Versus taking every single move that you see, every single potential trade that you see. Again, this is going to really help you guys out. And what I suggest is just always going in from a top-down approach, right? Look at your higher time frame levels. Look at your daily levels. Look at your 4-hour, your 1-hour, your overall bigger picture trend. Really start with the higher time frames, mark up those key, super important, very significant levels, and then work your way all the way down into, say, like a 5-minute time frame. And then from there, wait for the market to come to you in one of those levels. Right? That's it. Wait for the market to come to you in one of your levels that you've identified, right? We identified that level of resistance. We waited for the market to come to us. It came to us. Then all we have to do is wait for a setup. Did it set up? Yes. Was there a strategy? Yes. Was there a reason to get short? Was there a low risk, high reward? Yes, 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 yes. So again, at that point in time, there was a reason to get in. But again, we marked up our levels. We did our due diligence. We sat back. We were patient, we were disciplined, and waited for the market to come to us and our levels. Not what Joe Blow was talking about, not what this dude thinks the market's going to do next week, right? Based on our due diligence, right? The skill set that we've acquired. Mark up those levels. Get prepared. Do your TA. Do your DD in the morning, right? Wait for the market to open. You're hands off until the market comes to you in one of your levels. And once it does, then you can start saying, hey, is there a setup? Is there a strategy? Yes, there is. Okay, perfect. Let's build a plan. Where's my entry? Where is my stop? Where's my target? Right? How many contracts? How many shares do I want to buy? Then you just got to wait for confirmation. Takes the stress out of trading. Again, this is something that helps various different aspects of your trading. It helps with the discipline, the patience, the mindset, right? And then again, like I said before, you're going to notice you're not taking as many trades, right? And the trades that you're taking are more of high quality, higher probability trades. So in turn, what you're going to notice is more profits and a higher win ratio at the end of the day. Less stress, right? More confidence. Literally just by doing this. Something so simple. Marking up your levels, waiting for the market to come to you, helps you in so many different areas of your trading career, right? And this was just one example. They're on the SPY. I mean, what about the 2 trades that we had on Tesla yesterday, right? We had a couple trades on Tesla. We had a trend line trade yesterday on Tesla. Again, we came in, said, hey, there's this pretty nice trend line here on Tesla, right? And I don't really remember what trend line it was, but I think you guys get the gist without me having to like over explain it, right? But can't remember what trend line it was, but it was like, hey, there is a trend line here on Tesla. And if Tesla comes into that trend line, right, that's a trend line trade. So again, at this point in time, we're looking at Tesla. Like, is there any reason to touch this? No. But if it comes down to the trend line and it does something and it gives us confirmation for a trade, can we get in? Absolutely. And so what happened, right? We sat back and waited for the market to come to us, for Tesla to come to our area that we believe can hold on up, and we have a potential trade opportunity. And that's what it's all about. So what did we do? We sat back, we waited, Tesla comes down, hits the trend line, gives us confirmation, right? Allows us to build a plan. We're able to get in, and we're able to lock in $2 to $3 of profit there on Tesla, simply waiting for the market to come to us. If we thought Tesla was going to bounce here, right, we have this trend line identified, but now we're like, oh, that's a pretty big bullish candle. Oh, it's holding that prior level of support. Oh, and you start justifying, hey, Tesla's bouncing here. Maybe it doesn't come to the trend line. I've got to get in. I may miss out on the trade. Well, guess what? You're buying too early. You haven't let the market come to you. Right when you get in, the market goes against you. Now you're losing money. Now you're scared. Now you're getting out of the trade just to watch it come down to your area, set up, confirm, and move. I mean, how many times have you guys, for example, had a trend line marked up and you're like, you know what? If we come down to that trend line, I want to get involved. But then you see something like this where you're like, oh man, what if it doesn't make it to the trend line? It's holding that prior support level. That's a nice big bounce. We've got high volume, right? That's a bullish engulfing candle, whatever the justification is. How many times have you had a plan in place? I'm going to buy Tesla. If it comes down to the trend line, it gives me a reason to get in. It doesn't come down to your level. You see something and you start justifying why it's a good idea to get in early versus waiting. And you get in, you jump the gun. You're like, man, I think it's going to go. I'm going to go ahead and get in. You get in, and then boom, starts going against you. Now you're mad. Now you're scared. Now you're fearful. Dump, 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 right? You're getting out. Then it comes down to your level, sets up, confirms, and it would have been a winning trade. But you were too scared to take it the second time around. You got in premature. You got in early. You were justifying a reason to get in because you're not patient. You're not disciplined. Right? The market ends up going against you. Now you're mad, you're fearful, you're scared, you get out. It starts to possibly set back up again, but now you're too scared to get back in because you've already taken a loss. And then it goes with you, and now you're beating yourself up. How many times has that happened to you? Can't tell you how many times that's happened to me as a new trader. So again, really summing this up, wait for the market to come to you. Do your due diligence. Do all your TA on whatever stocks you're looking at. Okay? Do the best of the best job you can. Get as prepared as possible, right? And then wait for the market to open and wait for the market to come to you. That's it. And you're completely hands off until the market comes to you, right? You're completely hands off until the market comes to you. And again, you can see firsthand how that's going to really help you guys make more money in the market and increase that win ratio. And Tesla's a fantastic example of what I used to do as a new trader. I would get in here because I'm justifying it's going to bounce. There's a double bottom. When knowing my trade could be down here and should be down here because that's my level. That's my area that I've identified. But no, I justify. I get in too early thinking it's going to move. 80% of the time, the trade goes against me. I lose money. I'm mad. I'm upset just to watch it come down to my area and actually set up. But before it's all said and done, I've already lost too much money. I've blown up an account. I don't have any more buying power left for the day. Again, I can't say how many times that's happened to me as a new trader. And again, one thing that really helped me a lot was if the stock is not at my level, setting up, I can't take the trade. So right here, it may have double bottomed. It could have reversed, but is the stock setting up at my level, giving me a reason to get in at my level that I've identified? The answer is no. So that's one of the rules that I have is I can't take that trade. I have to sit on my hands, right? I can't take the trade because my level's down here, not up here. And I can't see how many times I've gotten in premature just to get stopped out, just to watch my setup appear, my opportunity present itself, right? By letting the market come to me. And overall, by creating that rule of, is the market at your level? Yes or no? If the answer is no, not taking that trade. And having that rule in place has overall, again, helping become more profitable and overall really increase that win ratio at the same time. Why is the stream down inside of chat? Ah, that's not good. Why is this spazzing out? Did you guys lose the live over on YouTube as well? Jeez, man. You got to absolutely love when streams drop. Weird. Huh. We still live on YouTube? Did I really just do all of this without any viewers? That's freaking amazing.